Hello and welcome to video number 8 in a series of videos designed to demonstrate how to use the Fractal Suite with the Bloomberg trading platform. In this video we are going to discuss a series of indicators that are displayed in panel 2, the same as where the predictor flag is displayed, that have a specific purpose related to the predictor as well. Now what the indicators do that I'm going to show you are give you a confidence rating on how well the predictor is performing based on the current market conditions. As we all know as traders, the markets change constantly, and sometimes they can be more volatile and less predictable, and less volatile and more predictable. Regardless of the prediction mechanism, it holds true that sometimes they perform better than at other times. So one of the tools that we can use to determine whether or not the likelihood of the prediction instrument or prediction forecasting algorithm is performing at its best is to use these confidence levels or prediction error indicators. So let's go back to our settings window, and first what I'm going to do is plot the close predictor. Now there is a specific error of predictor for each one of the individual predictors. So we have the high-low close, open high-low close predictor. We also have an error rating of the open high-low close predictor. Now these are the predictors that are going to be, these indicators are going to be displayed in panel 2. So first though, let's go ahead and plot the close. And now we are using the fractal regression. Our prediction horizon is 0, so we're looking for the close of the immediate bar as our forecast. And now we will scroll down and look for plot error of close predictor, check it, update it. Okay, here we go. So now what we see is, once again, let's zoom in so we can see this better. Okay. Now what this is doing is measuring the actual error between the prediction and the predictor. So what we're looking for is a lower number. We see we have our 0 marker here. We want this error to be as close to 0 as possible. So when this specific indicator is close to 0, that means that our predictor in turn is performing at its highest level. So we can see here that as we have a fairly low level of error, we also have a fairly high level of prediction. So now this is telling us a few different things. One, is there something going on in the marketplace we're not familiar with? The extraneous shock, the black swan, something that is affecting the market or that's making it volatile so that the prediction is creating more error than it would normally do. In such a case, we can deduce two things. One is that the prediction is not going to be as accurate, and number two, that the market's becoming more volatile. For options traders, this can be very useful for the fact that in many cases volatility is their friend. So this can be used as an indicator of that, as well as an indicator of how well the predictor is doing and if you should be following its advice. So now we can use this indicator on other predictors. Let's go ahead and take the predicted high, for example, and we'll go down here and we'll turn this off, and then we will turn the error of the high predictor on. So now we're going to plot the predicted high on the chart, and then we're also going to measure the error. So again, you see that this is corresponding to the error in the prediction. So we can zoom in and take a closer look, and we can see points where the error becomes less, and we can also see even visually that the prediction is better. So we can look at other predictors also, just to for cross comparison. For example, let's take a look at the Fractlet. We can update this, and you will see a change there. So clearly, the Fractlet predictor has less error in it across the board compared to the fractal nonlinear predictor. But even here, we see that the error is increasing. So this tells us that something is going on at this point in the market that is causing the prediction to lose accuracy. And we also see that the market looks like it's starting to collapse here and drop, and we're seeing a little bit what looks like more volatility and also what looks like a trend. So here would be a case where you might want to use the arc trend indicator in conjunction with the predictor and also with the error in prediction. Now there is an indicator here also that's controlled by a variable called the confidence level. And what the confidence level does is this allows you to simply use a constant horizontal indicator across this error and this error indicator, so that you can visually mark a place where it might capture your attention, so you're not interested in trading, or maybe you're looking for some sort of volatility that you do want to trade. So as an example, let's see, we're looking at let's say that just going back to stepping back out of the zoom here, and I would say that the majority of the time if we see anything that's going up above 0.02, that would be a warning to me. Just a quick assessment. So I might go ahead and say, well, let's do this. I'll take the confidence level, set it to 0.02, update, and now we have this constant at 0.02 telling me that if I see this error in the prediction go above 0.02, that I'd better pay attention to it. So from this standpoint, it's useful for two different things. One is a volatility measure, the other is essentially as a filter, or just as a heads up that something may be changing in the marketplace. We can use this with all three different forecasting algorithms, and we can also use it with all four predictions of price. Again, the open, high, low, and close. This concludes video 8. Thank you very much.